Hello, 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 and welcome to another episode of Freedom Ain't Free. In today's video, we're going to be talking about, are you married? Should you file your taxes jointly or separately if you're a Henry? I'm going to give you the honest answer to that question right now. And the answer is yes, right? So if you're a high earner, not rich yet, you should file your taxes together, right? We should file our taxes shortly. And I'm going to give you the 4 reasons why here in just a second. So my name is Joel Hughey. I'm the principal at ARC Financial Strategies. We work with Henrys, high earners, not rich yet. And we give them customizable step-by-step plans to get them to financial freedom. We like to refer to financial freedom from an income perspective. And we want you to be between $120,000 and $160,000 a year coming from your assets. We're going to show you how to build out a $2 million portfolio to get there. But in today's video, we're going to be talking about the 4 reasons why you, as a high earner who's not rich yet, should file your taxes jointly. First and foremost, marriage is a blessed union. It has a lot of benefits. It has a lot of incentives that are wrapped up into society to promote us getting married and staying married. And it helps us to move the economy forward. It helps us to grow our population. But in addition to that, when we start working together with our personal finances, it helps us get to financial freedom a whole lot faster. So I want to give you the 4 reasons today, and I'm going to give you a system or step within the system that you can utilize and put in place to make sure that you're going to maximize the current tax code for your benefits. So here are the 4 reasons why you should file jointly if you are a high earner, not rich yet. And the number 1 reason is your type of income. You don't have income coming from real estate. You don't have the income coming from the precious metals or dividends. You haven't built that part of your portfolio out yet. You've been focusing on your career and you've been growing your ordinary income, which is the highest form of income to be taxed in our country, right? So if you make a lot of money, but you make it on a W-2, you're going to pay the highest tax rates in America. And so if you're a high earner, not rich yet, you don't have the other forms of income just yet, but, hit the button below and book a session and we'll help you to build out that part of your portfolio. So all of your income is coming from your labor. All of your income is coming through ordinary income. And so if you are filing separately, right, you are fighting against the tax code and you're going to pay more taxes, right? So the second reason is the brackets themselves. You have to understand that your personal finances is a game, right? And you got to understand the rules of the game if you're going to put yourself in a position where you're going to be successful. So understanding part of the game is understanding the tax codes and the tax brackets, right? So you can actually get the entire U.S. tax code on one piece of paper. As a matter of fact, if you connect with me at the end of the video, I'll even send it to you on one sheet of paper. And here's the interesting part. The bulk of it doesn't even apply to you, right? You got one corner of one side of the tax code that applies to you if you're a high earner, not rich yet. So, you don't even need to wrap your mind around the fact that it's overly complicated because most of the rest of the tax code doesn't even apply to you. What does apply to you is the brackets. If you're single, and you make more than $105,701, you're in the 24% federal tax bracket. $105,701, and you're in a 24% tax bracket. Now, most of my clients are above that in household income, right? So, if you're filing separately, if you're making 100 and your wife is making 100, right, then you're paying 24% of your income in federal taxes. If you file together, then you can make $211,401. $211,401, right? So that's double for all practical purposes, right? Before you get to the 24% bracket. And why is that important, right? So with deductions, with itemizing, all those pieces of the puzzle, right, I can stay under that number and keep myself out of that higher tax bracket simply by filing my taxes together with my spouse, right? So that's the second reason. The third reason is you can put more money in your tax-free bucket. All right. So if you file single, right, and you're a high earner, right, there's a cap on how much money you can put into your tax-free investment strategies. If you file jointly, right, the cap is removed. Right. So I want to get as much of your money out of the system as possible. I want to get as much of your money out of the government's ability to take from you as possible. So we need to file jointly so we can maximize the tax-free investment options that are available to us here in America and get as much of our money out of the system. America is currently $33 trillion in debt. And there's $1 trillion a year in interest payments alone that America's got to pay. I promise you, they're coming for your ordinary income here shortly. So we're building out your financial future. Let's eliminate as much of the tax bill as we can. So if you file jointly, the door opens. You can put more money in your tax-free system. And the last one is really the main piece of the puzzle, if you ask me. It's just easier. Right? It's just easier to file together, right? Your accountant will appreciate it. Tax cut will appreciate it, right? It's just easier to pool all of the information and put it into the software system one time instead of putting it in there 2 times. So we want to help you. We want to point you in the right direction. We wanted to give you these 4 pieces of the puzzle that if you focus your attention on these, you're going to put yourself in a position to build out your first $2 million portfolio as quickly as possible. And lowering your taxes gives you more money to be able to invest. Being able to put more money in your tax-free strategy means I have to invest less because I don't have to outpace inflation. I don't have to outpace taxes. So I can put less money in because I'll be able to take less money out when I'm ready to retire. So focusing your attention on these individual pieces of the puzzle is going to help you to connect the dots and get yourself in a position to where you're going to be successful long term. So want to encourage you. There's a link down below where you can get your freedom number. And I want to explain to you why you want to get your freedom number and you want to get it today. Your freedom number is going to tell you exactly how much money you need to save on a monthly basis to get yourself to that $2 million portfolio. It's a personalized number just for you. And here's the best part. It's completely free. There are no catches, right? Click on the link. You're going to get your number immediately and you're going to have that information. Now, here's what I want you to do with that information. Here is going to tell you exactly how much money you need to save every month. And then I want you to apply that number to all your other financial decisions. So if we can file our taxes together and we can keep ourselves, below those upper echelon of brackets for, as long as we can. I want you to make as much money as you can, though, right? But if we can stay under the bracket, we want to understand how the bracket works. We want to work together as a team to get ourselves to financial freedom. $120,000 to $160,000 a year in income coming from your assets. You are financially free to go and do the things that you want to do with your life, to go and pursue the things that you want to pursue with your life, to go and connect with the passions that you want to pursue, to go and build the family that you're working so hard to support and to take care of. Go spend time with your family. Enjoy life because you only get one life. What I want to remind you as we wrap up today's video is freedom ain't free. We'll see you in our next video.